Hey guys, welcome to the Stop Renting podcast. Kind of switched up the studio a little bit today. I'm not with my usual partner, Kara. Today I have Jose Beaumont with the Miami Insurance Brokers firm. Jose does a lot of our insurance work for not just me personally, but for a lot of our clients. So we thought it'd be a good idea to bring him on here, especially with everything that's going on in the news about insurance in Florida. And this is the bad guy, the insurance agent. So joking, insurance is important. So we figured we'd have Jose on, ask him some questions, get a better idea of what's everything that's going on with insurance. So Jose, thank you so much for taking the time to come with us.
Appreciate the
If you
invite.
could run us through, happy to. If you could just let us know. So I know you work for Miami Insurance Brokers. Whenever I introduce you, I say this is my insurance broker. He can basically usually it's for home insurance, but he can give you all the options in the market. So and allow you as the consumer to decide. So could you share with us a little bit like what you do exactly, what it's like being an insurance broker, and we'll go from there.
Yeah, thank you once again. Honestly, well, we focus on all property and casualty. I would say 50% commercial, 50% personal lines. Obviously, you deal a lot with residential, and we see a lot in the market these days. The market is actually getting a lot better than it was. When I first started, I was a magician because I was saving people so much money. And then the market started getting hard all of a sudden. Carriers started pulling out of Florida, and the rates were doubling, tripling every year. And there was no better option, and all you could do is renew. And I did seem like a bad guy for a bit, even though was out of my control. But I did the best I could, and everybody else in the industry as well. So things are finally starting to get better 4 or 5 years later since COVID.
Yeah.
And yeah, it's there's definitely been a big learning curve over the years. So I have some good insight for you, if you want.
Yeah. How long have you been in the industry now? I know you said it's been 4 or 5 years that you've been in it.
It sounds pretty crazy. I'm getting close to the 10-year mark. I'm about to hit 8 years.
Wow.
Yeah, yeah, straight
Jeez.
out of college, the career fair. And I wanted to get
Wow.
into sales, and I just happened to fall in my lap, met the right people at the right time, and loved it.
Awesome. Well, can you tell us? I know it's been quite an interesting market, obviously in insurance, but can you share a little bit more what it's like, the learning curve, what it's like to do insurance? Maybe if somebody out there is thinking of doing insurance sales as a job, that's crazy. It's 8 years. I remember when you started, but yeah, what expectations did you have about doing insurance, and what's it like now, 8 years down the line?
So, well, I wanted to get into sales, and sales could be anything in the world. But people get into real estate, people get into finance, people get into law, um, mortgages, anything. And I just happened to meet the right people once again. But the difference with insurance is that it's a very secure, long-standing industry where as
Hmm.
long as you have your renewals and book of business and you keep your clients happy, you are continuously making more money. And as long as you keep your relationships good. And it's
Yeah,
different from other industries where you have the sale and then you move on to the next sale. There's no renewal, so you always have to be
correct.
making sure that you have leads in the pipeline and always closing.
New business.
So
Yep.
it's there's I'm not saying this is more relaxed, but it's you have a little bit more of a safety net in that sense. But it takes years
Especially
to
long
grow.
term.
Yeah, it takes years
Yeah.
to grow because I'm sure there's many different commission structures in different agencies, or some people just have 100% commission. Like the point I am, I'm 100% commission. So it's all on me to manage my clients and always finding new clients.
Beautiful. Yeah, well, and like I said, you do a great job, and that's why I'm happy we use you for everything, and I'm glad, and we're happy to recommend you to a lot of our clients. You do great work for them as well.
A big part of it is obviously we knew each other from the past, and a big part of it is the network that you have. So you can you can be a great salesman, but if you don't know anybody, you have to put in the effort to meet as many people as possible. And luckily, we did have the benefit of meeting in college and being involved in different
Hmm.
clubs, different activities that helped us grow that circle of influence and have more
Correct.
people to be able to sell to.
Definitely, I'm sure. Yeah, I'm sure that helped a lot, and yeah, I agree with you 100%. So since you guys are insurance brokers, I know a lot of my clients, I just had this one the other day, they went to one specific insurance company and said, we got a quote from this X, Y, and Z company. And it was an exorbitant, it was um, a high policy. But I said, hey, take a look, talk to Jose because he is a broker, meaning, from my understanding, that you're able to look at the entire market, various policies from various different carriers, and then present them all to one specific client. So, can you explain to us a little bit the difference between a person going to, say, Geico or Allstate directly, as opposed to going to, I don't know if they do home insurance, but, and then going to you, a broker, an insurance broker, to look at all the options in one place?
Absolutely. So there are such things as captive agencies where they only work for Allstate or only work for State Farm, and they can only offer State Farm or Allstate products. So they're a little bit more limited in that sense. And we are an independent agency where we get appointed with as many carriers, insurance companies as we can, and we
Mm.
see their guidelines and see what fits in with their appetite, is what we say, and we make sure to see if depending on the characteristics of the property or the client, we say, okay, this is the best place for you to be. And it's not always about price, it's about your business operation or your situation. So
Yeah.
many times people say, uh, I am paying this much and my neighbor is paying half of this. Why is that? Give me the same rate. Or my friend is paying the same thing, or it has the exact same condo I do. It's a case by case basis. You don't know what
Mhm.
your situation versus their situation is. So
Yeah.
it's like that.
Well said. Um, so obviously, a lot of the talk has been in Florida that, I don't know, 2 or 3 years ago, or maybe it was a little bit longer at this point, that everybody was saying that all the insurance carriers are leaving Florida. You can't get home insurance. I still hear that from time to time. A lot of clients that come from up north in the U.S. or outside the country say the same thing, like, I don't want to purchase in Florida, or I'm hesitant to purchase a property in Florida because you can't get home insurance. I obviously, that's not true, but can you explain to us what happened a few years back that some carriers did leave and where we're at now? Last I heard, most of them came back, or a lot of them came back. But can you explain to us a little what happened and where we're at now?
Absolutely. So it all had to do with the law and loopholes and attorneys, public adjusters, contractors, kind of taking advantage of the system. And insurance companies are there as a safety net when things go wrong. And I'm not saying that you know um, the attorneys and
They're
public adjusters
perfect.
were the bad guys
Yeah.
necessarily.
Yeah.
There's there's laws, and if they find a way around it, it is what it is. So there
Yeah.
was a bit of an abuse of claims for about a certain amount of years because if you found a crack on a tile of a roof, people were putting in insurance claims and getting entire new roofs. So the entire state started doing that. People just started door knocking and public adjusters, let's say, and saying, "Hey, I can replace your roof for free. Just put an insurance claim." So everybody started doing that. When the entire state starts doing that, the insurance companies, even though they have millions and millions of dollars, they're not prepared to all of a sudden take care of the entire state if everybody starts putting in.
Yeah. They're a business at the end of the day. They have.
No, they
Yeah.
can, but it starts putting strain on their books, right? So they had
Yeah.
no choice but to drastically increase all the rates because of all the claims that were happening. It was a bit of an abuse. Let's say
Yeah.
you had a little broken pipe. I don't know. They would exacerbate the amount of claims, the claim size to being a $10,000 job to 50, 60K, and
And then
not just
pocket the difference.
right, not just the contractors, but even attorneys. There was no cap on how many fees they could bill the insurance companies
Hmm.
for all their services. So finally, with obviously the frustration of everybody in the state saying, "Hey, this is becoming unaffordable. We can't live here like this," they finally putting a law to stop all those fees, and they started limiting coverage for certain things, and it was making it a lot harder for the people to take abuse or take advantage of the system that way. So finally, a couple of years later, after that law was passed, we're finally starting to see it work. now the rates are starting to stabilize, and now that rates are stabilizing, more insurance companies are saying, hey, we're not going to lose so much money if we stay in Florida, so they're coming back because it's
Got it.
starting to stabilize.
Makes sense. So it was. I thought it was more. And I appreciate that understanding because I thought it was more that we had all those hurricanes. A lot of the companies took a massive, like a loss, too big of a loss, and then they left, and because they lost so much money.
Not
Yeah, it's a
yeah,
bit of
that has a
everything.
factor, absolutely. And
Yeah,
if the state in the Panhandle gets demolished, then
yeah,
still it's all Florida companies handling the entire state. So if they get
yeah.
really hit badly, then they're still going to affect everybody else because we're in a
Got it.
pool. You have to understand, like everybody's pooled to.
Yeah, the whole state. Yeah. If it doesn't matter if it's Miami or the Panhandle that gets hit, obviously it's for the individual people that live there, but for the insurance companies, it's still Florida took a direct hit from Category 3 or 4 or whatever.
And then the less companies that were in the game, the
Yeah,
the more risk they took, the more premium they had to charge. And
yeah, it's a
also when there's
business
less competition, if there's one
by
company,
default.
there's nothing you can
They
do.
charge. They can
Yeah,
charge whatever they want.
right.
Yep. I had another question. Okay, so and I appreciate. So I guess the another question just popped into me. How many would you say like of the ones that left? So say like before all this, we were at I don't know 20 companies, insurance companies in Florida, and now are we below that? Are we almost at that? So like
Off the top,
ballpark. I know it's kind of hard because there's a lot of big and small ones, but
yeah, I mean, off the top of my head, it also depends on what insurance agency you're working with. Because if you're working with an agency that's two or three people or a smaller size, they're not going to have the appointments or contracts with as many carriers as a bigger agency can. So I
mm-hmm.
was also lucky in the fact that I came into an agency that already had many, many contracts with 10, 15 plus carriers. And even though it
Yeah,
was very hard for a few years, I still had all the options there. And so now
beautiful.
when it's gotten softer, all they do is they open up. So a big problem for many years was South Florida, Tri County. That was the hardest place, most expensive,
Yeah,
and the hardest place to find coverage. And now you're starting to see that in the West Coast, Sarasota and Panhandle. All of a sudden, they're starting to catch up to what the prices of South Florida was. So
yep.
yeah,
No, no. All
I'm
right.
not sure if that's the question.
So what
Yeah,
happened?
the question was how many carriers. I can't really know off
Yeah,
the top of my
ballpark.
head.
Yeah.
Yeah, I just know that. I
I
mean,
know. I don't even. Yeah, there would have to be like an exact number, but no.
for
I was
us,
just wondering if like most of them came back or not, or a
I
lot of
want to
them did.
say most of them came back. There was a few that went completely insolvent, meaning that they went completely out of
Hmm.
business, or they got
Yeah, they can't come back.
acquired by others. For example,
Oh,
the first one that comes to my head was there's St. John's Insurance a
I
few
heard of
years
that one.
ago.
Yeah,
They became Slide Insurance, um, and
they got
and they're
bought out
still.
basically.
Yeah, exactly. Or subsidiaries were created from an original insurance company. So I know, for example, Homeowner's Choice was a big one many years ago, and now it's Tip Tap Insurance, which came in below them. So
Oh, I think that's the one I have for my homeowners. That's interesting.
yep.
Cool. So, can you talk to us a little bit? So, obviously, we're brokerage, my firm, and then we. So, what are some of the things that somebody who is looking to purchase a home? So in our area, for example, a lot of the homes that are in good locations, like closer to downtown Sarasota, they're older. They're from the 50s and 60s. My home is from the 50s. We're very close to downtown. So a lot of people start to look at what's the difference in cost from being close to an older home in better location than say for the same like 400 or 500 grand, you can get a much newer home further out. Obviously, the homes have the same base price, um, can you explain to us a little bit of what it looks like to an insurance company when you go to apply for insurance on a 1950s home versus a 2020, 2025 home?
Absolutely. So the the main guideline is the older the home is, the more susceptible it is to claims. So the higher the risk, statistically
Hmm.
speaking, because things wear down over time, wear and tear, right? And
Yeah,
your home might have been built much better than it is now because they use cheaper parts these days compared to before, and they can last
yeah,
longer. But at the same time, it doesn't mean that the house doesn't need to be renovated. So if it's not
sure.
renovated and you've been in the house for 20, 30 years and you haven't done anything to it, you're at a higher risk. So having an older home will always generally have higher premiums. You can completely.
Even for the same, even if they both cost like 400 or 500 grand, if they have the same purchase price.
Yeah, the market value that has no correlation. It's really well, it does a little bit, but mainly they look at the replacement cost, not the amount that it's being that can be sold for. Because you can all of a sudden be
Interesting.
in a house that you bought for, I'm talking about old days, like $90,000 or $100,000, and now it's $600,000. It's still the same house. It costs a bit
Yeah.
more to replace, but it's the market value is increases much higher than the pace of uh, costing to replace it.
Yeah. So the difference between replacement value and what we would call market value, whatever somebody's willing to buy or sell it for, is more what you guys look for. Interesting. And obviously the replacement value for a brand new home is going to be different than the replacement value for a 1960s home.
It all depends on the characteristics, the size, the square footage, what it's like, the type of flooring, how high value the structure of the house is. You
Yeah.
could have marble flooring compared to laminate flooring. So it
Yeah.
all depends. The neighborhood also, the land, you're not insuring the land, but the land where it sits at, if it's a $2 million house, even though it's 1,000 square feet, it could
Mm-hmm.
still be very high to replace.
Got it. Which makes perfect sense. Um, so in terms of where was I at? Okay. So one of the big things that people so I guess a better question. If somebody were to buy it, I know you probably get these all the time. Like what let's say a $450,000 house, what is a realistic idea of what your ballpark insurance could be? Because that's the first one that I hear. I do a lot of calling clients all over the country to say I can't buy a house for 500 grand in Florida because my insurance is going to be 10,000 a year.
No,
Um,
I mean
I
that's
know it's not that high, but yeah. But what would you say is like yeah, yeah, yeah. So what would you say is more or less the average for again like a 450? Let's use 450 as an example, like a $450,000 house. What would be the ballpark insurance cost?
so I get this question a lot, and I can try to give people ranges, but the
Mm-hmm.
ballpark, it really depends because two houses could be built right next to each other, 1980,
Mm-hmm.
but one house was improved and renovated where the uh, you've run into this issue before where there's certain amount of nails or
The
protection in the
third nail.
roof, right?
Yeah, yeah.
And some were upgraded and some were kept at that basic uh,
Instant.
protection level of a roof that was built
Yeah,
in the old building codes, and some people upgraded to the newer building codes, so that has more credits. So
yeah,
depending on the inspections that come back to me and I see what credits are applied, I can give a ballpark. But in general,
yeah.
so the newer built properties, 10 years and under, I can say is probably going to be 1,000 or 2,000 for
Per
450,
year.
500K. Yeah, for the newer built properties. Now, 15, 20 years plus, it can be a few grand more, depending on the credits, depending on how
Yeah,
it was renovated, if it was kept exactly the same or not. So older 20 plus, I can say it could be 3 to 4 grand. Example, I believe your father-in-law, your Nicole's parents, they bought a
mm-hmm.
house right recently,
Yeah,
and it had no credits on the roof because it's an older house. And quickly, I gave them a ballpark range of it could be as low as 2 grand to as high as 5 grand, depending, right?
yeah.
And they replaced the roof, and it had the new building codes. Boom, got dropped to about 2 grand and something. So
I remember that one.
it
Yeah.
depends.
So if we could talk a little bit, I know the reports that you guys usually we do the inspections. It's funny enough, it was just my inspector calling me, but so I know you guys do the 4 point and the wind mitt. So I guess we can start with the wind mitt. Could you explain to us? And I know the third nail has to do with that. Can you explain? I've looked at it. I don't know what it. The only number I understand on that paper is I tell people all the time the insurance companies will look at it and they know how to read it because to us it doesn't make any sense. The only number I understand is the number of years left in the home. So can you explain to us like what a wind mitigation report is, why it matters, why do you guys as insurance companies care about it? Yeah, and how it helps the home be more
Absolutely.
secure, I
So,
guess.
because we live in a hurricane prone state, right? The wind mitigation specifically looks at the credits on the roof and the if you have impact glass or shutters on the house. So, it's how the home is built to withstand hurricanes, basically.
Or wind, yeah.
Depending on those credits that come with it, it'll give you better credits if your house is built to withstand a hurricane better than older houses that don't have those credits. So
When you say
there's
credit, so like a credit is something that lowers your policy.
exactly, yeah. So that's the most important inspection to have in order to get the best credit or premium. If you don't have it, then there's no credits applied, and it's going to be the most expensive.
Got it.
Um, yeah. So quick few pointers is the first one is FBC. Basically means is the building code that it was built. The roof was done right. So if the roof was
Mhm.
done in the last 20 years, usually it'll be built up to code, and that'll be a great credit. If it's an older roof, it doesn't have that credit. The
Mhm.
impact glass or hurricane shutters is a huge portion of it. That probably gives you the most difference in thousands of dollars of credits. Another one is inside the roof, the nails. There's toenails, clips, single wraps, double wraps. So depending on which one you have, it'll give you more credits.
Yeah.
So those are
Which
the
is the so the third is the third nail because we've heard that a lot. Can you just like very 2 seconds like what is the third nail? Why do you guys care about the third nail so much?
um, once again the I don't have the exact definition or uh, knowledge of how, right. I just know that if it has like two nails, I believe I could be wrong right now. The two nails is the toenail credit, right?
Okay.
Um, and the toenail credit is the lowest of the low, so
Okay.
that is weak.
So
And
third
if it
nail is
has
just like a saying. It's just like something that they. It's like a. It could actually be like a physical, like a third nail. That's so. My understanding is like the third nail is how it
and
holds,
it's
how the
not just
roof
one
is
nail;
held
it's
to the.
like all over the roof.
Yeah, yeah, like all. So it's like where the roof touches the wall. There's an extra nail to like hold the roof to the wall better. Like that's how I always explain it to people. Is that too general of an explanation?
It's a bit general, and I feel like real inspectors or roofers might correct me on that part
Yeah,
because I don't know the exact answer.
building definition.
Right, but
But it holds the roof to the wall better. We can
absolutely
agree
the
to that.
house, the roof to the house,
The house,
right?
the roof to the house.
The
Okay,
attachment,
cool.
right?
So the general idea is the same. All right. So talking about windows and hurricane protection. So is there a difference in that report if the windows are obviously there's hurricane proof windows and then you could have shutters. What's the difference? Which is there do you still get the same type of credit? Is there a better
Yes.
credit? How does that work?
So the credit is the same as long as you have the credit on the inspection. So an impact
Oh,
window will have a certification or a sticker or a writing in the window that says this is impact hurricane rated, right? And you don't
yeah.
have to have those windows, but then they also want to see that there are um, you have hurricane shutters to be able to protect every single opening or window in the house. So not just windows, but doors and
And
back doors,
garage.
sliding doors, right? The garage as
Yeah.
well. If it doesn't have that sticker that says impact rating, then you're not going to get that credit. If at least
So
one, go ahead.
if the windows in the house are not hurricane proof, but the inspector in the garage sees like aluminum shutters, you're getting the same credit.
Yep, as long as every
Oh,
single opening has
it has
that.
enough, yeah.
Yes.
Interesting. Interesting. How does that show up? Again, I've looked at the wind mitigation. I can't read it, but so somewhere in there it says either A, all the windows are and doors and garage doors are hurricane proof, or B, they they have shutters for everything.
Right. And so it just it's simply put is if at least one opening in the house does not have a shutter or
Yeah.
the credit, then they're not going to give it to you at all. It's either all
Yeah,
or
that I've
none.
heard.
Right.
Yeah, that I've
That's the
heard.
simplest way to put it.
That's good to know that the and then just I thought of so I saw this at a new construction home. Instead of having the accord like the metal shutters, they had this like a Kevlar mesh looking thing that had clips. How does that work for insurance? Is that the same as like aluminum shutters?
It yeah. I've only seen that in the last 8 years. Once, and it was somebody looking into it. They didn't actually have it. It cost a bit of money, and they saw that it was more cost effective to just replace the window or door with the
Mm-hmm.
shutters or the impact glass. Um, Instead of getting that mesh, you can get the
Yeah.
credit with that mesh, but it's very rare to even see that.
Okay. Yeah, I've only seen it once in all my years. I only saw it once, and it was like it did look kind of like I don't know. Other factors in the house made me think it wasn't like the best option, but I did see that one.
right? Your
Yeah,
house has a window on the upper side, on the upper
the
front of it,
transom window,
right?
yeah,
That's not rated, and it's
hurricane proof.
very
Yeah,
hard to get that specific triangle shaped impact glass. I think it's it
yeah,
costs more than it's worth, kind of thing,
yeah. We leave them. Again, they're not. What it
right?
costs to make them hurricane proof, it would just be better to close it off. But they do let in a lot of nice natural light. So the other report that you guys we do for insurance, the 4 point.
Hmm.
Can you go over the 4 point with us? Why that matters, what it looks like, all that.
Absolutely. So the 4 point is most important, well, second most important to insurance companies. You guys obviously will see a full home inspection, and that shows every little deficiency that the house might have. But the insurance company is only worried about four specific things: the roof, the AC units, the plumbing in the house, and the electrical panel. So if there's any hazards or anything's broken, it will be noted in the 4 point. So if the plumbing hasn't been renovated in the last 40 years and it's rusty and oxidated, or if it's really old polybutylene or cast iron
Yeah,
plumbing, that's a high hazard with which insurance companies know that there's a high probability that something will break in some time. So they'd rather
yeah,
not have those, and they'll tell you, hey, either replace these or we're just going to, not offer a quote. Or there are other insurance companies that will do it, but they're
a
charging you.
higher policy.
Right.
Yeah,
So yeah, those four things are it just they want to see that those are relatively renovated or in good condition. It doesn't have to be renovated, but if it's in satisfactory condition, there's nothing wrong with it, and it's not a hazardous electrical panel or type of plumbing, then you're good.
yeah. The one we always get is the double tap, where I guess there's two wires going into the
Right.
same
Yeah.
breaker. That always comes up. I just that's the one I always think of for the
Easy
4 point.
fixes though. There's some
Um,
things that are easy fix.
yeah, yeah. Usually it's super easy fixes like that, the double tap. So the other one being for the so how what's the difference in the reports between I know the roof in the wind mitigation talks about the roof, but then so does the 4 point. In the 4 point, what do they care about the roof? Is it just like the condition, the age of
Yes.
it? Can you tell us more about that?
Right. So the windmill will go more in depth with the roof and all the credits,
Yeah.
but the 4 point will simply tell you that the roof is this old. This is the permit that it was
Uh,
last replaced, or there's no permit, and it will tell you if it's in satisfactory condition or not. Usually, flat
okay.
roofs will need to be redone or renovated every 10 years. Shingle a lot more, tile a lot longer. So
Yeah. So is that so? One of the things we hear a lot is that if the roof has less than 5 years of life, the insurance company is going to ask you. So I have a lot of buyers that they say, "Hey, Rod, this roof is 12 years old. It's shingle. I looked. It should last about 15, so it only has 3 years of life left." Is that when they go to apply for insurance? Are you guys going to say? I'm sorry, I keep saying you guys, but is the insurance carrier going to say, "Hey, this roof only has 3 years of life. You need to renovate it"? Is there any truth to that?
yes, absolutely. So that was passed a few years ago, where I believe it was 3 years, many years ago. But once they started seeing the abuse of roofs, and also they started really looking at roofs as um, a high potential of possible problems down the line if it wasn't renovated in Florida, because things wear down much faster with all the rain and windstorms that
The
we have.
sun and everything.
Um,
Yeah,
but yeah, basically they want to see that it's very well, kept up to date.
maintain.
So if you want to wait, repeat the question one more time, because I feel like I kind of got lost in
I
there.
feel like I forgot it. I forgot the question on that one. I'll come back to it. It was something about the roofs and then the 5 years. That's what it was.
Yes, yes, yes.
Like
The
the
five
five
years.
year that yeah, the idea of the 5 years. If the roof doesn't have more than 5 years, they're gonna force you to
Yeah,
replace it.
because at least in the last 5 years, it's already worn down, and you're gonna need to do it sooner rather than later. And they'd rather not wait till your roof is completely,
Leaking and whatnot.
yeah, if there's holes or there's puddles or there's a lot more wrong with it. So it's for the safety of you, and also the potential claim coming up of the insurance companies. They tell you to renovate it. And also, you got to think about it this way: insurance companies, they can be annoying, I guess, when they tell you you have to fix this or else we're going to cancel you. But in the end, it's for your own benefit, because you're supposed
Yeah,
to keep your home or property in the best condition possible. It's actually negligent for you never to do anything about fixing something that needs to be fixed, because yes, insurance companies are there to cover claims, but they're not there to just let you or let the person
Yeah, to
let
maintain
things
your house.
get out of hand, right? So they
Correct.
push you to stop or mitigate things before the problem
They
happens.
become a problem.
And it
Yep.
seems like it can be annoying, but it at the end is for your own benefit, because it's stopping a problem from happening, a bigger problem from happening in the future.
Correct. Makes sense. So another big thing, we're in Florida. Obviously, we have hurricanes and all that good stuff, but we also have flooding. So can you talk to us a little bit about flood zones? And so obviously, if somebody's going to get a mortgage and the home is in a flood zone, they're probably the mortgage company is going to require flood insurance.
Yes.
So can you tell us the difference between hurricane insurance and flood insurance?
Right. So the reason why flood, okay, so first we had to differentiate water damage from flooding, right? Water damage is covered on a homeowner's policy in case pipes break, you have leaks, things happen. But flooding, the definition is the rise of a natural body of water. So you have storm surge that comes from the ocean, or the rise of a huge area
Yeah.
having 2 inches of water, and that seeps into the house. So that's flood. And the reason why that can't be on a normal homeowner's policy is because not every single home is in a flood zone, right? So only homes that are in a flood zone will be required by the mortgage to get flood insurance. And that can definitely bring up the cost a lot more. And if if you get told or advised by your broker or real estate agent, probably be best to avoid those flood zones, just to not have that extra cost. At the same time, it doesn't mean the houses in that are not in a flood zone can't be flooded. We saw over the last few
Yeah.
years, especially on our side of South Florida, Broward County, for example, there were many houses that were not in a flood zone that got absolutely flooded really badly over the last
Yeah.
few years, and they switched them over a couple of years from non flood zone to a flood zone. So things could change because they see that, oh, this is no longer a safe area. Things are changing and water is starting to
Yeah.
pile up. So, uh, yeah, flood insurance is important. Try to get a house that's not in a flood zone, but it doesn't mean that you can't
Yeah.
get flooded.
Yeah. So how do you guys? So I know I always hear the word flood elevation certificate. Can you explain to us a little bit of how that relates to the insurance, what that
Yes,
is, and why that matters for flood insurance?
right. So the elevation certificate, when they look at the what's it called,
The slab or the
no, if you are elevated above the ocean level, then
yeah,
you're better off, right? The water is not gonna get into your house easily. If you happen to be in an area that's slightly lower, below elevation of the ocean level, then you're more
yeah,
likely for water to
the flood, yeah,
collect in that area and get into your house. So if you are in an area that's below the ocean elevation, then you're higher risk. So that elevation certificate looks at the exact um, even inches or amount that your home is elevated above or below ground. So most of the time, if
got
you're in a flood zone and you get the elevation certificate, it can most of the time help you because it's going to prove that your house is elevated
slightly
above
higher.
ground, right? And there are
Got
times that sometimes is actually worse, because
yeah, 'cause it's like
rarely,
negative or something.
yeah, it can actually prove that, hey, your house is actually worse than we think or we saw. So it's actually going to
Yeah,
be a worse rate. But in that case, you don't have to use it, the elevation
yeah.
certificate, but it's beneficial.
So that's another question. So if you do have to get flood insurance, do you the same way how for the other inspections like the 4 point and the wind main, is the flood elevation required for flood insurance, or can you guys just give
No,
just a flood policy? Okay, so it's not
it's not
required.
required, but it is beneficial if you happen to be on a property that you're wanting to buy and you see that the flood insurance quote is coming in at 3-4 grand. Then it's probably going to be in your best interest to try to get that elevation certificate to prove that your house is not as at risk as they
It's not as
think.
bad.
Right.
So it would be a credit. It would be a credit the same way like like the hurricane proof credit, but it would be based off the height of the floor, basically the height of the home.
Basically, yeah, from the ground to your first floor, right? So it is a credit, absolutely.
Awesome. Perfect. Dun 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 dun. Legislative. Oh, what are the most common mistakes homeowners make when selecting or maintaining their home insurance policy? So the main mistake that you see home buyers or people who are looking for home insurance making.
I would say the biggest mistake is not paying attention to it. There's some people that buy a house and just forget about it and let the policy renew for many years, and all of a sudden they were bought it at 2 grand one year, and that insurance company kind of wanted to pull out of this area, but they're not completely non-renewing you. So all they're doing is increasing the rate to kind of push you out, or they see that the area is higher risk, so they increase the rate, right? Sometimes so much so that it's not even reasonable, but people don't pay attention, and all of a sudden
Mm,
their taxes and insurance has skyrocketed. They have no idea why, and depending on how much they pay attention or care to look, you could see somebody 5 6 years down the line paying 8 grand for their house, and they keep paying it just because they just
they
allow
don't think about it. Yeah.
allow it, and they could be paying 4 grand less, if they actually shopped around or use a broker. So
Yeah.
the same way you have to keep in
So
communication with your accountant or
yeah.
or attorney, whatever you want, financial
Yeah.
advisor, is important to stay in contact
Real
with your
estate
insurance.
broker.
Yes.
Yeah. I agree. No, so what would be some obviously having like a conversation like pretty regularly with your insurance broker, but what would be like some things that people can do to their house? I know we talked about like maintaining the house, but is there anything people can do routinely to make sure that their insurance doesn't get out of whack other than just like home normal what advice would you give people to maintain a good insurance policy on their home, like a good price for it?
Well, if the house is already, if you already have maximum credits on a mitigation and everything's already renovated, then you've done the most you can. All you can do after that is to confirm that you have the best carrier or rate in the market. And
Yeah.
if there's nothing to improve, the house is already renovated and it already has the best things, then you just have to stay in communication with your broker to say, hey, is this still the best carrier this year for your house? And in
Got it.
Florida, it's very volatile because things are always
Yeah.
changing. So the best carrier that was in 2020 is not necessarily the best carrier that is today. So it changes up a little bit.
Is there like a time frame that it's good? Is it good to is there anything negative or good about like maybe switching every year or two the home insurance policy if you have all the credits still?
Every year, only if your rate drastically changes or coverage is limited or removed,
Mm-hmm.
then you should try to switch. But if the premium stays flat and it's relatively cheap, and you're with a A-rated, a reputable company, there's not really as much of
A
an
reason.
influence or need, right? But
Got
like
it.
I said, things are changing every couple of years, so it's just good to pay attention. For
Got
you,
it.
for example, you've been with the same carrier for since you bought the house, and it's been the best option in terms of coverage and price for all these years, because other carriers will be, let's say, about the same or slightly less, but it won't give you full water coverage like you have, and it didn't
Yeah.
make as much sense to switch.
Makes sense. Yeah. Again, I'm glad you and me always talk about it pretty often. So like I do my job. I stay in contact with my insurance broker. So in Florida, we've been hearing a lot about like the condo crisis and the prices of condos have gone overboard. A lot of people attest or attribute that to rising insurance on the building, causing the HOAs to go up because of that engineering lawsuit and all that other things. So, can you talk to us a little bit about why that's happening? Why the policies, I guess the master policies that they're called, the condos, why they've skyrocketed? What's going on there?
Um, I think a lot of the attention came after the collapse of the building in Sunny Isles. So once
Yeah.
everybody paid attention to that. That was a tragedy, right? They
Yeah.
started to see, hey, this building had not. There was so many red flags. There was cracking in the foundation, or a bunch of things wrong with it, and nothing was done about it for many years. So they started to investigate the what's it called, the president and the board, right? They were negligent in doing certain amount of things, and that started to everybody started to inspect all their condo buildings, and they started to see all the problems, and that was one factor of it. But then also there was a lot of mismanagement with funds. Right, there's been a lot of arrests, to be honest, in the last few years of
Yeah.
residents or people on the board that were using the funds from the building for things not related to improving the
Yeah.
building. So people are paying all this extra cost to upkeep the building because of mismanagement, along with the change in the and all the problems that are being found for condo buildings. So
Yeah.
it's a mix, right? Mismanagement, and also not realizing that these buildings need to be upkept, or have a closer
Yeah.
look
That has, yeah.
more than
It's a
before.
building like any other. Yeah. It's a building like any other. They need to be maintained. Do you guys see? So if somebody is going to buy a condo and the HOA is, let's say it's a perfect, the building's well run, the HOA is financially strong, the HOA dues are not that bad. What insurance does somebody get for a condo? Say they buy a condo for whatever, 400 grand, 300 bucks, or whatever, call it 500 a month for the HOA. They're still going to have to get or should get their own insurance policy. What's that insurance policy? What does that cover?
Okay, so a condo insurance policy is also known as an HO6. Basically means it's walls in, right? So the condo
Okay.
building has their master property policy that's covering the entire building, but they don't have the responsibility to insure the inside of your unit alone. And
Mm-hmm.
that's what the condo policy covers, specifically the inside or the walls in of your unit, kitchen, floor, ceiling, everything like that. If you have a water leak,
Personal content.
right? If you have a water leak, your insurance policy is going to cover the damage in your unit, but damages that are coming from outside are responsible for the building. But if you have a water leak in your unit and it damages other units around you or below you, then you are also responsible for that damage because it started in your unit. That's why it's important.
And the HO6 policy covers you for that.
Yes, there's coverage for that.
Okay, so
These
yeah, like if
days,
your water
there's
heater leaks down,
right. These days, because there is so many claims for water damage in condo buildings, the market started changing, and over the last few years, and not they stopped offering full water coverage and started only giving you 10,000, which is limited water coverage. So a lot of the times, if a building is not relatively new, they're not going to give you full water coverage, and you're only going to have $10,000. That doesn't mean
hmm,
that you can't pay for damages to other units, because that's where liability coverage comes into play, and usually it's 300,000, 500,000, whatever it is.
it's different.
But yeah, without getting too complicated.
What's yeah for normal like $400,000 or $500,000 condo? What's a normal HO6 policy run you yearly? I know you can't give specifics, but ballpark.
Depends on the. You said relatively new.
Yeah, call it whatever, like a
Relatively
10, 15
new.
year old condo.
Well, the newer ones can be very cheap, 1,000 more or a little bit more, But
Yeah,
if you include hurricane coverage, and it's an older one, it could be a couple grand more, like 2 grand
so you can do
plus.
hurricane. You can do hurricane insurance for a condo.
That's generally included. If you have a
Okay,
mortgage or any lender, you have to get hurricane coverage. Some people might say, "Hey, I have my building covers hurricane and this and that, and I don't want that." Yes, the building has that policy, but it doesn't cover your unit inside. So you need to have
interesting.
coverage for that. If you have, for let's say, for example, the origination of a claim, if it happened because a windstorm came, which caused a water leak, and that water leak hit a electrical panel. I'm just making things up right now,
Yeah,
and it started a fire. Even though it's a fire, the windstorm caused that, so
yeah,
it's a
and that's where
windstorm.
the policy has to. Yeah, the insurance has to be whatever the original cost thing
Yes,
was.
yes.
Fascinating. I learned that. I didn't know that. Um, oh, so for investors purchasing rental property, so we have our area, same as Miami and Broward, and everybody has a lot of second homes that sometimes people rent them out. So either second homes or we'll do investment properties, I guess. What's a what's a typical investment property insurance policy cover? What does that look like? What's that process? If you're gonna buy a home to
Am I
rent
talking
out,
about a condo or home? It doesn't matter.
I would do home because we, at least in our area, a lot of people like to buy homes and Airbnb them. So short
That's
term
that's
rental
a big
policy.
Yeah, that's a very important thing to note. So an investment property could be an annual rental or it could be a short-term rental. And depending on how you use it, you have to get the right insurance policy because majority of insurance carriers do not cover short-term rentals, especially
Ah,
daily rentals. So you have to find the right fit for that.
got it.
Um, so those are called landlord policies, easily understood. For us, is a DP3 for a home or an HO6 rental for a condo. Um,
Yeah.
but yeah, knowing whether it's a short-term rental or annual rental is very important, or it could be just a vacation home, for you, and that's also different in the way we set it up. You have to be transparent in the way you're going to use it because some people buy
With your
houses.
insurance broker, yeah.
Right, because some people might buy a house initially as their primary residence, and all of a sudden, a year later, they decide to rent it out, and they don't ever tell their agent or insurance company. So then you're being insured for a primary residence when this is not a primary residence, and that could lead up to a claim denial if you are not transparent because you're not paying
Yeah, if you're
for
running it as a rental
rental.
property.
Right.
Yeah. Cool. Appreciate it. I would say the last question would be, what can people expect in terms of insurance policies? Are we heading up? Are we heading down? What's the future of Florida insurance looking like over the next couple years, in your opinion?
Absolutely. So we are absolutely entering a softer market because we were in a hard market for the last few years where there was no carriers. Now that there's a lot more competition in play, it's gotten better. The more competition, the more the rates can go down because there's more insurance carriers wanting
More
to take a
options.
piece of the market share. So it is absolutely getting better. You're not seeing drastic 10-15% decreases by your renewal, but you could find that if you shop around and you find a new insurance carrier that wants to have as much business as possible, you could find that discount, but that takes you shopping around with your broker. But it definitely
Yeah.
is getting better. I tell everybody, it's a good time to shop around. So
Yeah.
it's
Beautiful.
not
Awesome.
100% guaranteed that you're
Yeah.
going to find
But it's
something
always
better.
good to look around.
Yeah.
Yeah, what I always tell my clients is like, hey, if you're gonna, which again, like it just happened like 2 weeks ago. They're like, hey, Rod, we got, I think it was a 10-year-old home, and they're like, the insurance quote we got was like 6 grand. I'm like, that sounds exorbitantly high. And then I like asked them a few questions, and I figured out they just went to one insurance company, and that was the one policy that one insurance. So I was like, talk to Jose, talk to somebody who can look at all the options. And I don't know, I think you quoted them like 2,500 or something crazy like that, because
I
you were able to explore the market and get them a better option. So
yeah, I
yeah,
recently I've been definitely being proactive in shopping around all my clients' renewals, especially because I want to keep my clients, right? So I'm making sure that
yeah,
even if I'm taking a drastic decrease, at least I'm keeping the relationship
the
and
clients.
making the client happy. There are a few times that I already had put them in the best possible place, and they email me saying, "Hey, I heard the rates are going down and this and that," but I happen to put them in the right place that it's still the best option, right? So
Hmm.
there are certain times that the rates are going down, but you're still in the best place right now. Like there's everything else is still
Yeah,
going higher, especially for like those
yeah, and you
really
obviously you
old.
want to,
Go ahead.
yeah. No,
Yeah,
you want to compare like what you're paying to what you're getting, because like the cheapest insurance policy is cheap for a reason. You're obviously cutting corners. You're putting yourself at risk for something, because it's not cheaper for no reason.
yeah. Everybody has a different risk tolerance. Some people don't care at all about insurance. Nothing bad has ever happened to them, and they don't want to pay this extra money. That's fine. And some people just want to be able to sleep at night knowing that whatever happens, that they are covered.
They're covered.
Everybody has a different risk tolerance, so it just depends on the person.
Yeah.
Some people just want, give me the cheapest thing. I don't give a damn. I want to close. It is what it is, right? But at least I
Yeah.
have to inform them that this is what you're getting. We recently had a client, well, one of your clients that he has a nice Sarasota property that he just redid and had a lot of renovations.
Yeah.
We gave him 5 different options and what the difference was in each one, and he just chose one of the more expensive ones that was about
Hmm.
10K, right? But it was the most comprehensive, broadest coverage you could possibly get, especially because he wants to do short-term rentals. So it is more
Yeah.
expensive, but he knows that he is being properly covered
He's
for what
covered.
he wants. And he could have
Yeah.
saved.
No, and
Yeah, he could have
he could have saved a couple
chosen
grand.
not to
Yeah.
have hurricane coverage and pay 2 grand, right? But he chose 10 grand because he
Yeah.
knows that was the best.
Yeah, which makes a lot of sense because he bought that property at and he put a lot of money to make it really nice, and it's going to be a beautiful Airbnb. So I saw the emails going back and forth between the both of you. So, cool, awesome. All right, Jose. Well, thank you very much for your time. Very informative. I learned quite a bit, and I'm sure everybody else did. So, yeah, keep up the great work. Thank you for your time, and yeah, thanks,
You got
guys. Appreciate your time.
okay. I was gonna say you got time for one question for you.
Oh yeah. I should have held back my speech. I'm going to circle back to my ending speech. Go ahead. What's the question?
So you started your own brokerage recently,
I did start my own
right?
brokerage. Yes.
What
Yeah.
inspired you?
I can.
What inspired you
I
to go on your own,
what
man?
inspired me. So that's a good question. I think a lot of what I saw. So I'll go back. So when I was doing mortgages, I dealt with a lot of agents, and I was like, okay, in my mind at least, like what a real estate agent was like not exalted, but it was kind of up on a pedestal. And then I met a lot of agents, and a lot of them are fantastic. I'm not talking bad. I'm like a lot of those agents were great, but it kind of put me like, okay, I can kind, especially with the knowledge, like the my educational background, the mortgage background. I'm like, I can do this. And then once we started with the team, same thing. Like I was just from interacting with other people in the industry and getting a better idea from the inside of the industry. I saw what I consider to be things that could be done better. Um, so I was like, I might as well just do them myself better. I'm not saying that I'm perfect. I'm not saying that I have a lot to learn,
You
and
had
I know
confidence
that.
in yourself.
Yeah, because again, the same way when I transitioned from mortgages to real estate, I was like, I can do this. I understand the concept. I understand the conversations. The people skills are there, the education, the sales skills. So yeah, this to me was the logical next step. I didn't think, obviously, didn't think we'd do it this quickly. This is kind of a bit rushed, but I think that's in
Life
life. It's
happens.
better to take risk. Yeah, it's better to take risk and like stumble and learn. And yeah, so far
I'm
so good.
curious.
But
I'm curious. What made you see the higher benefit in going into real estate than from sticking to mortgages long term?
so to be honest, and we know you and me know a lot of the mortgage brokers and agents. Um, the mortgage part of it is there's a lot of issues that can come up with in a mortgage transaction, in a real estate transaction, where people blame the mortgage company even though it's not really their fault, or they shop them around. Whereas the real estate agent, like yes, things I have one right now that's like on fire, or several actually, but I'm still, because of my position as a real estate advisor, I can stand next to my buyer and explain the situation, or my seller, explain the situation like, hey, how do we get out of this, as opposed to being pitted against the buyer or the seller in a situation. So in mortgages, a lot of it was like, oh, this thing went wrong, and then everybody kind of turned on the mortgage person, which is another one we're going through. And so I didn't want to be a part of that. I spent many great years in the mortgage industry, and I learned a lot, which helps me in real estate. But yeah, it was, and it's more analytical than it is, like it's more paperwork and numbers than it is people skills. So, and I enjoy driving around and seeing different properties as opposed to just sitting at a desk all day. So it made more sense to me. Yeah.
Yeah, you can have fun with it. I'm
Yeah.
curious.
And you can
Do
start
you
your own
have
brokerage.
exactly? Do you now? I've talked about some of the trends or the market insight on the insurance side. Are there any trends at this time that you're seeing in the real estate market that buyers or sellers should be aware of?
Yeah, so definitely a lot of opportunity for people to buy property. The podcast we're on right now is the Stop Renting podcast. Yes, prices are going down. Yes, the idea of like, I saw Instagram or Facebook video this morning of some guys like, the market's going to crash. You need to wait 6 months to a year to buy. That's, first of all, the 2008 style crash is not going to happen. We've already had a
Yeah, I do see
massive
some
correction in price.
clips of people like real estate gurus, people that own a
Yeah,
lot, that's saying
yeah.
they're waiting to they're trying to sell a lot more.
Yeah,
Their properties these
certain
days.
people are waiting for the bottom. I still think if you look at it, especially if you're in like a Grant Cardone or like an industrial investor, or it's not industrial, whatever, like a high level investor, it's different. But for like the regular person who's paying 2 or 3 grand a month, I still say it's a better option to buy. Right now, you can negotiate better. prices on homes, seller credits to buy down interest rates, you can set yourself up long term a lot better. So yes, the market's still adjusting. Yes, the prices are still coming down. But that idea of trying to time the market and wait for it, I think, is dangerous. And it's very hard. You're probably not going to find it. And by the time we do hit the actual bottom, all the other buyers that are on the sidelines are going to jump in, which making it more difficult for you to buy. So yeah, I think the prices are still going to adjust. I don't know until when. It's up to anybody. Maybe 6 months, maybe 2 years. Interest rates obviously have a big deal with that. So, but I do think once the interest rates come down to somewhere normal, then the prices are going to stabilize, and then we'll get back to a normal 3 to 5% appreciation year over year. So that would be my spiel on the market.
Okay. And I'm curious because obviously, the best lessons are usually the most painful, or,
Yeah,
we learn a lot through mistakes, right? So
correct.
what would you say? Do you have anything that comes to mind that was a really hard lesson that happened to you that kind of changed the
Mhm.
way you do business now?
Um, got quite a few of them, but
Mhm.
no, I think
The
one of
same,
them was, yeah, that's a good question. So yeah, I got one. So it was probably like a few months into real estate. I was doing cold calling for expired listings. I got a lady.
right?
I went. I did. She was very like determined to sell her property. We listed it at a super cheap price. We went under contract. We got one almost, and then it fell through at the inspection period. And then because of the time frame of it and because of the price point, I kind of took my foot off the gas because I didn't want to like annoy the client. She basically said, well, the listing expired, and she went with another agent. And I asked her like point blank, I'm like, what happened? She's like, well, I didn't feel like you you were
Top
what was
of
the
it.
word she used? Not that I wasn't trying, but that something was missing. And I pressed her on it because I wanted to know like what did I do wrong. And thinking back to how I felt in this situation was I didn't want to bother her. And as opposed to thinking my job is to be the real estate advisor, this is somebody who's going through a real estate transaction. I can't really leave it up to them. It's not annoying for me to say, hey, this is the reality of the situation from my professional perspective. So I think that was a massive lesson to me. It's like I'm not annoying people with whatever content, calls, text, emails. My job is to advise you. If you're not in a position where you need the advice, perfect. But I never feel that I'm annoying people. I never feel that yeah. I feel like I'm providing real estate advice, um, which is the same as keeping it up to date with your insurance and your accountant and everybody else. It's important to understand your as a part of your whole financial life, you need to understand real estate to some degree. And my job is to advise people. So I
I
think that
can
was a very hard lesson to learn.
I can agree
Um,
because I
but
know how I am personally. I want you to bother me because my mind is on my work and my emails all day.
yeah, yeah,
I need that push to, hey, I need you to sign this now, or I need you to make a
yeah,
choice of this and that because I'm gonna keep on putting it to the side because I have my clients to like worry about.
yeah.
So I like that pushiness, to be honest. There's obviously
A
a
lot of
limit
people
to
are,
the pushiness, but I want you to
yeah,
push me.
a lot of people are like that. And it's especially when you first start in real estate, a lot of people don't like are scared to be annoying. And it's one of the things I teach the agents. I'm like, but you're not being annoying. If you know what you're talking about and you're providing value, you're not being annoying. If the person really doesn't need it, then they don't need it. Yeah, dude, I tell everybody that. Jose, anybody who's ever heard me say follow up until one of you dies, that came from Jose, and I live by that. So either they're gonna buy or sell with us, or they're gonna block my number if they really don't need us. But yeah, so that's the one. Yeah, at least like that one. I always think about that one transaction. It was like a $200,000 condo, but in my mind, it was like that's one that got away because I didn't do my job well enough, and I thought I was being pushy when I actually failed the client and I failed myself. So yeah, good
Yeah,
lesson
I always
for real estate.
feel that, I mean, as long as you know you did everything in your power to try to make
Correct.
something work, then you
Yeah.
can have the peace of mind or closure that,
Hmm.
it
Yeah.
the rest is on them.
Yeah.
You did your part.
Yeah. Same way. Like yeah, I interview for listings all the time, and for I get some of them, and other ones I don't. But there's very few that I feel like I didn't do enough. I obviously like my listing presentation could be better, my this could be better. Like I could have said this differently. Like you're always critiquing, but at least I know like I sent the calls, I sent the texts, I sent the emails, I sent the letters, I followed up. If they chose somebody else, perfect. Maybe they for whatever reason, but I did everything on my part because that's
And
the
I have
worst feeling is
to
if you.
Yeah, and I have to compliment you because I know you're going to be very successful just because you are the type of person that answers or texts back and responds immediately. And within minutes, you always pick up. You don't stay on the phone too long, to chat at all. But it's just like, okay, thank you, bye. But you always
Yeah,
pick up. You always know what's up, what's up. And those
yeah,
characteristics are characteristics of somebody that's going to be very successful. So,
yeah.
got to applaud you for that one.
Thank you. No, I appreciate that. And it's yeah, I learned that from the mortgage industry because it's like time kills deals. Like there's nothing that irritates me on God's green earth more than like real estate agents on either side who don't answer their phones. I understand we're all busy, but you can take 2 or 3 seconds. You're not. Most of us are not that busy. So yeah, and I preach that, so I
I
live
agree.
by it. But
Mhm.
yeah,
All right.
cool.
Okay, I
Thanks, bud.
bombarded you with some extra questions there.
No, that's good. I appreciate that. I
I
like
gave
that.
you extra
I'll
content
be
too
good.
for yourself.
Yeah.
That's
Awesome. All
good.
right. Thank you, Jose. I appreciate your time. Thank you,
I
everybody.
will.
Thank you for the yes.
I need
Stay
everybody to
tuned.
stop renting.
Yeah, everybody needs to stop renting and every 6 months go talk to your insurance broker. Make sure you have the best policies from
Annually,
Miami insurance
every
brokers.
year.
Annually. All right. Cool. All right. Thank you guys. Bye.